may know, that if I've mentioned it already, that I am a student at university in the UK, so the equivalent of, I guess, college in the US. And I am a business student, and most of what I do is accountancy. And I've seen a few ASMR YouTubers do something similar to this with their sort of field of expertise. Now, don't get me wrong, I'm not claiming to be an expert by any capacity about any of this, but I think what we're going to talk about today is something that even I can get my head around and explain. So we're going to be talking about income statements. So let me write that down. So we are talking about income statements. So an income statement is a very basic financial statement, and in its most basic essence, it looks at two things. It looks at income, and it looks at expenditure. Now, an income statement typically looks at a 12-month period. So figures that are present in an income statement are correct of a period of 12 months prior to the date of issue of the statement. And that date will be on the top of the statement. Now, we'll get to that very quickly, but we'll do an example. Income statements usually come bundled with something called a balance sheet, and some of the numbers that appear on the income statement will also appear on the balance sheet under the same label. Now, a lot of figures in accountancy have two sides to them, what we call a debit side and a credit side. And if a figure has come out of the debit side, that figure must come out of the debit side for the accounts to be balanced. That's really what financial statements are all about. It's about balance and about ultimately getting a number which should be zero, theoretically. Now, obviously, there's been many scandals over the years, and it's not uncommon for businesses to, I guess, inflate their own numbers to appear as though they're doing better than they are. But all you need to know, really, for the sake of today's video, is that an income statement is a financial statement that looks at income and expenditure. This balance sheet we aren't going to talk about today. We could in a future video. This is really about the liquidity position of the company, so it's about the current position of the company. So a balance sheet is a snapshot, sort of liquidity of the company, whereas an income statement is a look back at a 12-month period prior to the statement, and it looks at income and expenditure. So what we'll do now is we will let's do an example. So all income statements have the first line at the very top will be the company name. So for this, we will put the channel name. ASMR, you sitting comfortably, Inc., I guess. And then it would have income statement. And then, as we previously discussed, it would have the date. For the sake of argument, we'll just make it easy and do the last day of the year. And we don't have to put those two X's, just they can denote any, year. It doesn't have to be the current year. Now, it's important to note that many income statements aren't going to be December the 31st to January the 1st, because that would assume that every company that's ever been opened was opened on the, the 1st of Jan, which isn't true, obviously. And I believe that it's December the 31st, just so it's a bit easier. So we're going to put, I think we'll do 2 columns, and we'll just put pound signs in this case because I'm British, so I do want to put pound signs, but this would just obviously be the currency of whatever, whatever the valid currency is for where the company operates. So these just denote columns. We don't usually put a line down the middle, so I won't for this video. Okay, so the first thing, as we talked about income and expenditure, the first thing that goes on an income statement always is sales, or sometimes it's denoted as revenue. So we'll just put it in brackets for now. Let's just say, for the sake of argument, that this ASMR, use it comfortably, has made £50 million of sales revenue for the year. Okay, so this is our sales revenue. The next column we have is cost of goods sold. Now this in itself is a number, but it's made up of lots of different things. Some of the general things is materials or raw materials. So what do you buy to make your products? So let's, I guess, say that's, I don't know, 8 million for the cost of your raw materials. Labour, which I guess 11. These are just, again, random numbers plucked out of nowhere. And then we'll just put a general thing for overheads. That could be anything. Rent, electricity, gas, water, anything, utilities and rent. Okay, so the total of that we'll put over here, just so we have all the totals. So that's, 24 million. This now gives us what's called our gross margin. And actually, I forgot, this cost of goods sold is an expense, so it's technically a minus, and in accounting we denote a minus by putting the number in brackets. As such, this gives us our gross margin, which is 26 million pounds. That can be gross margin or gross profit. Again, these are interchangeable terms. You might see gross profit used, you might see gross margin used, just means exactly the same thing. Okay, let's move it up. Now, we usually have under here operating expenses. It's worth noting that there is a few different ways that you can sort of, I guess, convey the same information on an income statement, and I guess perhaps financial practices may be different in different countries, so some of them might not look exactly like this, but you can get a general idea as to the things that are included and what it means for the total at the bottom. So hopefully we can, get our head around that at least. Okay, so operating expenses, this is things that you incur on a day-to-day basis that aren't necessarily directly involved with the production of goods. So your cost of goods sold is more to do with things that are sort of involved in the production and creation of your product. So things like labour and materials, and then the overheads, we can put the overheads in here or here. Sometimes you might see rent, electricity down in the operating expenses. In the end, as I said before, because they have to be on the debit or the credit side, it ends up being the same figure anyway. It's just, as I say, some places and some formats may have them in different places. Okay, so in operating expenses, see a lot is selling expenses. So this might be transport between shops. It might be, if you're selling your product in, for instance, a supermarket. Some supermarkets charge you money to put your product in what's seen as a favourable place. So I know in the UK, and probably all around the world, you pay a premium to have your product displayed at eye level, so customers don't have to look up or down for your product. So these retailers may charge a premium for where they put your product. Having things near the door, for instance, when people come in, it's the first thing they see. You might pay extra for that. But anyway, we're getting off topic. So arbitrarily, let's just say 9 million. Another one that comes up a lot is administrative expenses. Sort of the expenses involved in the sort of coordination of your operations. That's more of an internal one. So I suppose they are all internal technically, but let's arbitrarily say that's 6 million. And then this is one that is also linked to that balance sheet which I talked about up here. Depreciation. Now depreciation is, let me actually bring you in a little closer, there we go, that's a bit better. Okay, depreciation is when you have an asset, which is something you own. An asset could be a vehicle, a building, other things, computers, anything you own, office chairs. It could literally anything that you own, anything you've bought as a company that has a value is technically an asset. Labour isn't technically seen as an asset because it's difficult to put a value on. But the example that's very easy to use and that that makes sense to most people, because a lot of people have one, is a car. You buy a car and you sell that car in 5 years' time. That you aren't going to be able to sell that car for as much as you bought it for, and so the difference between the price you bought it for and the price you sold it for, that is what's known as depreciation. And there's a few ways we can calculate that. As I mentioned, depreciation is more in detail calculated on a balance sheet, and the value that is on the income statement is the yearly depreciation. So you might own an asset for 4 years, but the only thing that you're going to include in your income statement is the depreciation that it's incurred over the past 12 months, because as we mentioned, that's the period that we're looking at for this income statement. Okay, so again, arbitrary figure, let's say 5 million. So over the course of the year, the value of our assets has gone down by £5 million, and that is technically an expense because that's money that we have spent that we're not going to get back, if that makes sense. So that in total is 20 million. So that's our total. That's our total operating expenses. So now, and as I mentioned previously, we'll put that in a bracket because we are denoting let me bring you in there. We are denoting a minus, so we put it in brackets. Okay. Then that gives us our operating income, which is a total of our gross margin minus our operating expenses. So in our case, it is 6 million. Our operating income is 6 million. Now, this is something that may or may not be on examples that you may see, but I'm going to include it just so interest revenue. So money that we've earned from interest. So this could be, money we have deposited at a bank, for instance. And let's, I guess, arbitrarily say that we only got 50,000 from interest because, we'd have to have a hell of a lot put away. Interest expense is the sort of counter side of that, and that could be interest that we've paid on a loan that we've perhaps taken out. Loans often you pay back the principal amount, and then you also pay back a rate of interest. Otherwise, what's the point in the bank giving you a loan if they're not making any money off it? So again, arbitrarily, we'll say 100,000, and that's an expense. So we'll put that in brackets. The only reason we didn't put these in brackets is because it's implied that because it's under an expenses section, that these are all minuses, and then we just made sure we denote it with a bracket here because we want it in the totals column, if that makes sense. But because we're talking about both here, we'll put a bracket around here just so we remember. And this is something I see sometimes, very rarely, but extraordinary items, little one-off purchases, things that don't often go through the books, but when they do, they have to be accounted for. And obviously, that would be an expense, would it? Hang on a minute, have I got that right? No, sorry, that's a plus. My mistake. Sorry. Extraordinary items, this could be like sale of assets, for example. My mistake. So if you've sold an asset and you gained income from that, it's not related to your sales income. It's income from a different source. Okay. So we've managed to mess that up. So that is that ends up being a plus of 150,000. That gives us then let's bring you down a little bit further. Our income before tax, because as we know, death and taxes, so tax always comes, and this, let's say for instance that we are going to just incur an income tax. In all likelihood it would be a corporation tax, but just for the sake of this example, so actually let me put our income before tax in. So we have 6,150,000. So I might actually have to get a calculator out here. Oh well, no, we will say income tax at 20%. So we have 20% tax. So we have 6.15 million here. 10% of that would be 615,000, which means two times that, which would be 20%, is 1,230,000. And as I mentioned, that is a minus, so we'll bracket that because it's in our totals column. And finally, this is our final figure. The bottom line, as it's known, is our net income. So we've taken into account all of these things. What we've sold, how much it's cost to sell that. We've got our gross profit. We've then taken into account how much it costs to operate on a daily basis. So how much it costs to sell, how much it takes to coordinate and upkeep our internal processes, the depreciation of our assets, which gives us our operating income. Then we think about some, less likely extraordinary cases, but we still have to include them. have some kind of tax. Here it's income tax, but it could be, corporation tax, any kind of tax. You'll often incur more than one type of tax, and that gives us finally our net income, which is our bottom line, and that, in this instance, is going to be 4,920,000, if I'm not mistaken. I've done that off the top of my head. 80 million. Yeah, I think that's right. £4,920,000, and that is the profit that we have made in last 12 months. There we go. So that is a very, very basic look at an income statement. That is, I think, the way you would be taught. Let's bring you back out. So let me try and get the whole page in. Yeah, pretty much. Good enough. That's probably the way you would be taught in a business class. There's some nuances and different things that would be thrown up in an accountancy class. And specific cases where it's going to give you a bit more of a headache to include, because you're going to have to work out the figure before you actually put it into the statement. But that is a basic look, a very basic look at an income statement, which is kind of the backbone statement of, well, how a company is doing, basically. Because profit is, at the end of the day, still the key determinant factor of performance in business. And obviously we live in a world now where different things are being valued more. Businesses engaging in ethical practices, there's more value being added to that, etc. But at the end of the day, if a company loses money, it's not going to be able to operate. So it is a very important statement, and something which all accountants will encounter and use. So yeah, in any case, I hope you have enjoyed. I hope you found this in some ways educational, in some ways relaxing. My thought was, if an old man shouting it at my face in a lecture theatre can put me to sleep, then me whispering it to you down a microphone will surely do the job. So yeah, if you've enjoyed the video, then please consider liking the video and perhaps subscribing to the channel. Obviously it really helps me out a lot. But apart from that, thank you ever so much for watching, and I will hopefully see you